Hi folks, it's Steve here at the Forex Codes. Good afternoon. I'm into my 16th year of trading, and honestly I've made every mistake in the book, but I'm still standing and I'm still profitable. Ignore the following gems at your peril. Okay, let's get back to it. Part 2. Gem number 8. Look for reasons not to trade. Does that make any sense? Not trading, that is, sitting on your hands or your ass, is the default position. The default position for a trader is actually to do nothing. Get a t-shirt done. Get it written on the front. That point is so important that you should take a note of it and revisit it frequently. Those of you who really want to become successful Forex traders, get it tattooed on your forehead. A free t-shirt for anyone who does this. Default position is not to be in a position. And this is fundamental. And exactly the opposite to what 90% of losing traders think. Not having a position is a position. The trader position is to not have a position rather than being in one that's losing. Don't enter a trade until it's been well thought out, a target set, a stop set, and contingency plans in place for exiting the trade. In other words, trade as per the trading plan. How many times have we mentioned this? How many times? Okay, there it is in black and white. Stick to your trading plan. You've got to have the discipline to do this. Very important. And also, when the trade's finished, write up your trading log. We've also mentioned that before, haven't we? Gem number 9, patience. Absolutely, and I'm one of the most impatient people in the world. Really, I've struggled with this for years. I'm in my 16th year of trading, and being patient is not easy, but it's an absolute must for being a successful Forex trader. Wait for the correct setup to appear as per your trading plan. Now I know you're sick of me talking about this trading plan. This is it. This is the Bible. You've got to have that trading plan either stuck on a computer or stuck on the wall next to the computer. If a setup does not occur, then do not trade. Sit on your hands. So let's say the setup occurs and we're in the trade. So we're in the trade. Allow it time to develop. Give it time to create the profits you expected. Don't get out early. Okay, Jim Rogers was attributed to saying this. I wait until I see a pile of money sitting in the corner with nobody waiting to claim it. I then go and pick it up. The definition of Forex trading patience. Absolutely. So it's like equivalent of setting traps for the price. Do your analysis, trade by a trading plan, and don't be influenced by any other outside factors, and you certainly shouldn't have news channels on. That is a big no-no. And trade your plan, wait for the setup. Finally on this point, if our go-to plan is to do nothing, it means we have to be much more selective when we're looking for a trade entry. Agreed? But that's the opposite of what I see traders doing now. Gem number 10. Scared money never wins. Don't trade with money you can't afford to lose. Only risking what you can afford to lose is an extremely important rule for all traders. but not for the reason you might think. The reason you do not want to risk capital that you truly can afford to lose is that it will affect your ability to trade logically and dispassionately. If you're risking capital that is essential to your current lifestyle, then you won't be able to make the kind of calculating decisions that successful trading depends upon. Don't shoot yourself in the foot before you've even started by risking money that you can't afford to lose. So don't trade the mortgage money or the rent money. It affects your judgment. Start small and use the power of compounding. I've done a separate video on this, so just look back and see the power of compounding when using a small account. So you could have a part-time job or your full-time job funding your trading by starting small to begin with. For example, a 1k deposit, $1,000 deposit, if you're making 5% a month, which is within all of you. I'll tell you this now, this is within all of you to make 5% a month, and without breaking too much sweat. Now over 5 years, that's 18 grand. Another small deposit, 5 grand, based on 5% a month. It's 93 grand over 60 months. That's not a long time, you know. When you look back 5 years, was that a long time? No. So if you look at Forex trading as an investment, as a long-term strategy, which it is, and one of the reasons people fail, one of the many, is that they look at it as a get-rich-quick. They see these Forex sites and Instagram accounts with flash cars and beaches and stuff like that. These guys aren't making any money trading. I can tell you that for a fact. So invest for the long term. That's got to make sense, or don't trade. Or trade against me so I can take your money. That's probably even better. Alright, gem number 11, FOMO. Now you've got to know what FOMO is, and if you don't, stick it in your Forex dictionary. The fear of missing out. Now we've all gone for a cup of tea or gone to the toilet or done something, and the setup's gone. We've missed it. For whatever reason, we waited an hour for this thing to happen, and then we nipped out to the loo and we came back and oh, this thing started moving. And so we jump into the trade because of our FOMO, our fear of missing out. Don't do it because the trade is gone. So don't chase a trade. That's the best way to put this. If the trade is gone, don't chase it. So if your trade is missed, wait for a pullback. Remember, we're talking about trend trading here. Wait for a pullback or a retrace to occur before putting the trade on. In other words, wait for a better price. Don't just chase after a trade. Because if the trade's already gone 10 or 15 pips, if you trade in a 5 or 15 minute chart, that's most of what your trade would have been had you got in on time. Do you see that? If there's no pullback, there's no trade. If price runs away without you, just say goodbye. Do you know what you say? That's interesting. If you don't know what that means, see the last video. It's fully explained. Don't trade on impulse. There's always another trade. You know, like buses. You don't have a bus for a while and 3 come along at the same time. It's the same with setups. Don't take boredom trades. Sit on your hands. There's always another trade at some time. So here's an example, in fact yesterday. You're waiting for the trade, nothing's really happening, and then we're all up. This is the gold chart. Whoa, up it goes. Now it's tempting to just try and get in here or get in here or get in here. Don't do it. Don't chase the trade. Wait for the pullback. See the pullback here to the wave, the TFC wave? wait for the pullback, get a light green candle, and then trade. Okay, you might want to wait for the break of the previous day's high, which is what the big thick yellow line is, but you wait for the pullback and then trade. If you missed it there, you could have waited for the pullback here, light green, trade. Okay, here's another really good gem. Number 12, avoid overtrading. Now, beginning traders, novice traders think they've got to be busy, busy bees. They think if they're not trading or they're not in a trade, then they're not trading. It's exactly the opposite is the truth. Think of a different slide earlier on about default position being not in a trade. Avoid overtrading. Put simply, overtrading is the act of trading too frequently, obviously. Making too many trades. Sit on your hands until you see something significant based on your trading plan. Because quality setups take time to materialize. Can you see the theme? We're into gem number 12, and can you see the theme here that we're going through all the time? Quality setups, trading plan. Sit on your hands. Take the right setups. When you exit for a loss, and believe me, this happened to me hundreds of times over the last 15 years or so. When you exit for a loss, but you know deep down that you shouldn't have taken the trade in the first place, that's a strong signal that your trading frequency is too high. It's also a signal that you're a bloody idiot, but there you go, that's something else. But you know when you shouldn't have taken the trade. Usually out of impulse, chasing. The setup that it's almost there, but it's not quite. You know the one? You take it anyway, and of course it loses because you didn't have the patience to wait. So all these things come full circle. Wait for the setup to occur, then trade. Right, not fantastically clear, but yeah, I've looked like that, and that's a drip, by the way, attached to my arm. Yeah. The early days of trading, absolutely. Successful traders, the 5%, the 1%, whatever figure it really is. Number 13, lucky 13. Follow the trend. Trend traders. Currencies trend well, so stay with the trend. You're less likely to fail if you trend trade than if you counter trend trade. So in an uptrend, I will expect support to hold and resistance to be broken, and the opposite for a downtrend. So we're moving up, higher highs, higher lows. In an uptrend, on the Forex Code systems, I should see green TFC candles dominating the trend. Ask an 8-year-old, I can ask an 8-year-old what the trend is and they'll tell me. You know, some people have been trading 5 years, still can't tell what the trend is. Ask an 8-year-old. If you haven't got one, borrow one from next door. Ask an 8-year-old kid. In a downtrend, I should see the red candles, the red TFC candles dominating the trend. And if it's choppy and sideways, I should see blue TFC candles dominating the range. Stay with the trend. So now you can see the trend. Can you see how the wave acts as dynamic support? Look. The wave, the TFC wave, acts as dynamic support. But we're going to uptrend because we've got green candles. They vary between dark green and light green. Light green ones are the ones we trade on. Can you see? Higher highs, higher lows, and support provided by the wave. It does this, by the way, 90% of the time. I don't see why everyone doesn't use the TFC wave, but there you go, I'm biased. So that's your uptrend. Again, it comes back to the wave, doesn't it? look there, almost there. But red, the wave acts as dynamic resistance here, that's a downtrend. Clear, isn't it? Sideways trend, see there's a lot of blue. There's a bit of green and red, but it's mostly blue. And look at the angle of the wave. 3 o'clock. Isn't it? Just go back up here. When we're trading in uptrends, the angle of the wave has to be between 12 and 2. Downtrends, between 4 and 6, the angle. And you can see where the sideways trend is. So follow the trend. Okay? Trade with the trend. Gem number 14, look for confluence. So what's confluence? And how does it impact your trading? You're not going to enter a trade, for example, long, just by using a stochastic. Because the stochastic might be sold. Or the market is an uptrend. Or any individual item, an RSI, whatever. You need additional supporting evidence to give you a signal to trade. And that's part of your trading plan. And this supporting evidence is known as confluence. Confluence is when two or more factors give the same trading signal. For example, the market's in an uptrend. Price retraces to an area of dynamic support like the TFC wave. Trix goes green. The cloud goes green, and so on. More than one factor giving the same trading signal. So we don't trade with a signal from one indicator alone, no. And again, point I've just made. You need additional supporting evidence, and we call that confluence. Now let's have a look. I've numbered these so we can see. Right, let's look at the bottom Indy. One of my favourites, which is the TFC squeeze. We're in a squeeze, that's a red dot, and the squeeze fires off long. That's number one. At the same time, both Trixes are green, and my Trix is crossing the zero line. Both are green. Okay. Number three, my TFC cloud, all 4 time frames, 5, 15, 30 and 1 hour, are all green. Number 4, light green candle. You can trade on the break of this line here, the Davos here. More on that on another video. 5, take your profit, or take your profit wherever your trading plan tells you to take your profit. But that was a 40 pip, $4 trade. That's because everything is green. I go color coded, as you know, those who've been following me and know my systems, the TFC systems. I go color coded. Everything has to be green, or I'm not trading for a long, and red for a short. Can you see about confluence? Don't just trade on one indicator alone, or even 2. That's the point. Okay, I'm going to leave it here, and we'll start part 3 on gem number 15, which is don't get addicted to trading. Oh, ho, ho, ho. Worse than cocaine, folks. But let's talk about that in part 3. I hope you're enjoying the video so far. It's taken me, I've got to stop saying I am, I've noticed. But it's taken me a while to get the feel for this, and it's a new channel, and as we keep going through, we're going to get better at it. If you think it's good information, please subscribe down below, share and like the videos, and let's keep this thing going, and let's help you become a better trader. Okay, part 3 to follow. Stay tuned. And remember, how you do anything is how you do everything. See you soon.